Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair, United States dollars to the Canadian dollars. And of course, first, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we're going to be seeing on the chart. Now, we have noticed that the USD CAD slips below the 1.3600 mark amid rising oil prices with modest USD weakness. And of course, a combination of factors drags the USD CAD to over a one-week low on Tuesday, while bullish oil prices underpin the loonie and exerts pressure amid a weaker USD. Retreating US bond yields, the risk on impulse continues to weigh on the buck. The USD CAD pair adds to the previous day's heavy losses and remains under some selling pressure for the second successive day on Tuesday, while spot prices dropped to over a one-week low during the early European session, and with bears now looking to extend the downward trajectory further below the 1.3600 round figure mark, while crude oil prices remain supported by expectations for the biggest supply cut by OPEC Plus since the 2020 COVID crisis, and continue to underpin the commodity-linked loonie. This, along with the prevalent US dollar selling bias, acts as a headwind for the USD CAD pair and protects for an extension of the corrective pullback from the highest level since May 2020. Now, the Bank of England reaffirmation to buy up to $5 billion euros of long-dated gilts drags the US Treasury bonds yields away from a multi-year top touch last week. Apart from this, the risk on impulse, as depicted by a strong follow-through rallying the US equity markets, further seems to weigh on the safe haven buck. Though hawkish Fed expectations could limit losses, while investors seem convinced that the US central bank will, of course, stick to its aggressive rate hiking cycle to tame inflation and have been pricing in another supersized 75 BPS increase in November. The bets were reaffirmed by recent hawkish remarks by several Fed officials, and this in turn favors the USD bulls and could offer some support to the United States dollars Canadian dollar pair, at least for now. Furthermore, on the markets, market participants remain concerned that a deeper global economic downturn could possibly dent forward demand, and this, of course, might keep a lead on any strong gains for the black liquid and further contribute to limiting the downside for the USD CAD pair. This, of course, makes it prudent to wait for strong follow-through selling before confirming that spot prices have found a near-term top. Now, market participants look forward to the U.S. economic docket, featuring the release of JOLTS job offerings and factory order details, while during the early North American session, this along with speeches by FOMC members, the USD bond yields and broader risk sentiment will drive the USD demand and provide some impetus to the USD CAD pair. Traders will further take cues from oil price dynamics to grab short-term opportunities around the majors. Now, possibly this has made some impact on the market. We are hoping that a continuation to the upside is most likely in the books, and we're looking out for region close to the 1.32 threshold and push up back to push up further to 1.33. Of course, it means at this point we're going to make looking out from here. We are going to cover nothing less than 64 to 65 to 70 pips or even more from that entry point. So that's our technical analysis on today's currency pair, the United States dollars to the Canadian dollars. Now let's move over to the stock markets. Hello guys, welcome back. Now today on the stock markets, we'll be having a look at Johnson & Johnson, and for the most impact, we are seeing that Johnson & Johnson has acquired Aleos Biopharm Incorporation, a privately held infectious disease biotech, for approximately $1.75 billion in cash. And this, of course, should have a very huge impact on the market as we're expecting. It's currently beginning to kick, and by the beginning of the stock markets open, we are expected to see something amidst the 167.38 threshold and a possible push up to the 170 zones in coming days. This, of course, should have much effect on the market. So if you're looking to buy now at this position, let your trade run up to It's a trade run up to the 169.90 threshold. We expect it to have nothing less than 70 pips or more from this trade, of course, which is good money. Now, that's our technical analysis on today's stock markets. Johnson & Johnson. I remain your host, Nick. Bye for now.